Well, what do you know? Everybody expected this stock to go down. What happened? The exact opposite. Welcome to investing in volatile stocks. Now, let's talk about the good, the bad, and the ugly for this quarter. Because let's be honest, even us, the bulls, we've talked about that yesterday in the live stream. This quarter was not a good one. But it was to be expected, right? We knew the production and delivery numbers. We've heard the comments already 3 months ago during that earnings call. So we knew things weren't looking great. So yeah, when you see those numbers here, total automotive revenue down 13%. Total revenues down 9%. Total gross profit down 18%. If you look at operating margin, down close to 600 basis points year over year to now just 5.5%. Adjusted EBITDA down 21%. Adjusted EBITDA margin is actually up quarter over quarter, but down 240 basis points year over year. We knew things weren't looking great when it comes to profitability. If you deliver less, if you've got price cuts, that's usually what happens. But there are some bright spots here. One, energy generation and storage revenue continues to grow. It's up 7% year over year. Services and other revenue increased 25% year over year. By the way, energy gross margin was 24.6%. That's up 1,370 basis points year over year. The company continues to invest in its infrastructure, whether it's manufacturing, AI, robotics, FSD, you name it. Operating expenses is up. This quarter also, by the way, free cash flow negative $2.5 billion. So we're not surprised, and Wall Street was not surprised by these numbers either. But as we've been talking about, the most important part of an earnings report like this, an earnings season like this, especially for Tesla, it's the extra commentary on what happens afterwards, on the Robotaxi, on the next generation models. And finally, they actually delivered. Before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, one thing a lot of people are not talking about is the supercharger stations, supercharger connections. But in my opinion, stations more important. That's up 26% year over year. Why is that important? Well, it's pretty simple. You open up to more EVs, you deliver more Teslas, more people will go to the superchargers, more revenues from superchargers. It's another business unit for the company that is getting overlooked, especially since non-Tesla cars do pay a premium between 20 to 30% or so. Then we've got this slide here, which basically shows Wall Street, look, Tesla is an AI robotics company. You should not be looking at us just as a car company, despite most of our revenue coming from the car part of the business. So they show us here FSD V12 miles, huge increase there in the overall FSD miles. They also show us Tesla's AI training capacity. That thing has basically exploded more recently. They also said that they're working on ride-hailing functionality that will be available in the future. Showed us a nice little render of how the app would look. They also told us that they will own some of the fleet. Some of the fleet will be owned by you and me. You can say it's basically going to be an Uber/Airbnb, they said. You can also say or tell, let's say the network, look, only certain people can use my car, which in my opinion is a pretty neat feature. Then with regards to the battery powertrain manufacturing, they say here 4680 ramp continued successfully in Q1 and continues to stay ahead of the Cybertruck ramp. Costs continue to come down sequentially as scrap yield and production rate improve. They also shared some positive comments with regards to the overall battery supply chain. Things are looking a bit better right now since a lot of car companies are pulling back on their EV investments. So these battery makers need to sell their batteries, and so prices are way more competitive. Then the Tesla ecosystem. Again, one picture here showing you that this is not just a car company. Moving on to the particular thing that made the stock go up 10%. So, first of all, they said here, we have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start of production in the second half of 2025. Bam, stock went up 5-7% just on that sentence. By the way, during the earnings call, Elon said, I think we'll have higher sales this year than last year. I was very skeptical of this happening because if you look at Q1, if you look at the start of Q2, you have to ask yourself, how are they going to deliver more vehicles this year than last year? But hey, maybe they've got some surprises up their sleeves. They continue by saying here, these new vehicles, including more affordable models, by the way, models, not one model, will utilize aspects of the next generation platform as well as aspects of our current platforms and will be able to be produced on the same manufacturing lines as our current vehicle lineup. This update may result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner during uncertain times. They also say here that this would help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over 2023 production before investing in new manufacturing line. We've talked about that before. I've talked about that on X as well. Tesla has not been at full capacity for quite a while. And last thing here, this is why I think there's going to be multiple models. They say here in another sentence, our purpose-built Robotaxi product will continue to pursue a revolutionary unboxed manufacturing strategy. And with regards to the up-and-coming models, they say here they expect it to be more like the early 2025, if not late this year. In my opinion, forget about late this year, unless it's going to be like the Cybertruck, really 1 month before the end of the year. They also say here that we think we should allow us to get over 3 million vehicles of capacity when realized to the full extent. Then, a quick update for my favorite part of the business, which is the Tesla Semi. So they have started construction near Gigafactory Nevada, but they also said that the first vehicles are planned for late 2025, with external customers starting only in 2026. Moving on to a couple of things that were mentioned during the earnings call. One of the reasons why EV adoption globally is under pressure is because, well, other automakers are pulling back on EVs and pursuing plug-in hybrids instead. In my opinion, these are the worst cars out there. I can understand why some buy them because, yeah, it's the same as before. You don't have to charge it. You go to the gas station. You basically burn less petrol. So, yeah, okay, fine. But overall, you're not really evolving that much. Then they said, or he said, Megapack in particular reached an all-time high in Q1, leading to record profitability for the energy business, and that looks likely to continue to increase in the quarters and years ahead. It will increase, we actually know it will, so significantly faster than the car business as we expected. Couple of extra points here. We're in conversations with one major automaker regarding licensing FSD, probably Ford. We'll be showcasing our purpose-built Robotaxi or Cybercab in August. I think August is not just going to be a presentation. I think it's going to be a product reveal, and quite a big one. We expect the energy storage deployments for 2024 to grow at least 75% higher from 2023. We expect the inventory build to reverse in the second quarter and free cash flow to return to positive again. Then with regards to the Elon Musk 25% ownership, etc., he did say this: if the company generates a lot of positive cash flow, we could obviously buy back shares, which would mean that his share of the company grows. Moving on to Optimus, quick comments here. So Tesla is best positioned of any humanoid robot maker to be able to reach volume production with efficient inference on the robot itself. Tesla's AI inference efficiency is vastly better than any other company. There is no company even close to the inference efficiency of Tesla. We've seen it with the car as well. They used older chips that could perform quite well in an efficient way. It's very important if you want to build a, let's say, compact-ish humanoid robot. And so right now, after the dip under the $140 mark, we are sitting at $160 pre-market, which would mean that we're getting close to that 20-day moving average. And again, an area we've been there before. So from a technical standpoint, we could have seen the rebound and we're going to stay in that region for a while until we get the next earnings report. Because remember, now they have set the bar a bit higher than before, so they have to deliver. Overall, fair thoughts, let's say, bad quarter. Good comments on the earnings call, finally some good comments, because now Wall Street is maybe a bit more aligned with what the company's vision is, even though the company has been talking about AI, robotics, things like that for quite a while, but the message now has been quite clear, plus pulling forward the releases of the next generation cars is very, very well received, not just by Wall Street, but probably by future customers as well. Which, yes, I know some people might say that, oh, but this announcement would mean that we'll have an Osborne effect on the current lineup, etc., etc. Well, first of all, you don't know what the next generation products are going to look like, the price of it, so I don't think it will have such a big effect. That's just my opinion. Overall, yes, the stock reacted positively. But would your opinion would have been different? Would it have been different if the stock was now down 10%, but anything else has stayed the same? Let me know down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.